Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the forex chart of US dollar index DXY in front of us. After PCE data, market was volatile, but we can see that market is still trading inside the range only. If you look at the market sentiment, we can see dollar pressured by dovish Fed remarks. The dollar index slipped towards 104 on Friday, giving back gains from the previous session and facing renewed pressure from dovish remarks by a central bank official. New York Fed President John Williams said he expects the central bank to cut interest rates later this year amid easing inflation and a healthy economy. So there is a good chance that in the coming days we may get to see pressure, selling pressure on dollar index because they do not see economy creating conditions that would require the Fed to hike rates again. So this may put some pressure on DXY in the coming days. And technically, to continue the upside, as we have been discussing, we need DXY above 104.20. If it stays above it and starts going up, then only it will be a continuation of the uptrend. And as we have already seen, that the fundamentals are slowly pushing dollar index towards the downside. If that happens, then yes, we may see dollar index breaking 103.40 and heading towards the next support of 103 level. So the weekly closing is going to be important. Let's wait and watch. Now let's look at the economic calendar because today also we have news coming up during the US session. They are not very important, but still you need to be careful for 1 to 2 hours because market will be volatile. These type of news do not have the capacity to change the direction of the market completely like NFP CPI, but still as a trader you need to be careful because our stop losses may get hunt. Now let's look at the chart of gold. So my dear friends, gold made this candle after PCE data and made a high of 2050. Our resistance level worked, but honestly speaking, uh, going with resistances or support at the time of news is not a good decision. Anyways, if you have taken sell, hopefully you made money, but next time be careful. Try to follow the trend of the market after the news. Anyways, we can see that after hitting the resistance of 2050, market came down by almost 70 to 80 pips, and right now market is going up again. So if you have taken a buy position on gold, you can be on the trade because further upside is possible. And if you're looking for fresh position in the market, then obviously you need to wait a little time because buy at retracement will be the best trading strategy for the day. Means if you see market coming down, you can look for a buy around 2035. 2035 is the level for the day, but in case market shows extreme volatility, extreme selling pressure, in that case the support will be 2025. Or in simple words, we have two supports where we can look for buy at retracement. The best and the strongest support is 2025, but as 2025 is far away from the current market price, so we can also look for buy around 2035 as well. Let me show you why. Here we are using FIBO again, my beloved FIBO. So on 2025 we can see we have FIBO 38.2% retracement level, and we can also see the market has taken support previously around the same area. So if we combine both the factors, 2025 or around 2025, we have a strong buyers present, but this level is far away. So we are also looking at the first FIBO level of 23.6% retracement level. We can see around 2035 we have the FIBO as well as the moving averages, dynamic support. So during the day, if market drops, we can definitely expect a bounce around this area as well. And we have a risky buy. Okay, we have a risky buy around 2037 to 2038 for 30-40 pips. If you are a daredevil kind of a trader, if risk is your middle name, then you can look for a buy around 2037 2038 as well. Okay, why? Because here the previous resistance may act as support. During the Asian session, European session, if you see market is going down but there is not much selling pressure, then you can look for a buy position. But if you're not in a position to take any risk, if you're looking for better trading opportunities, if you're a learner, then it's better to wait for 2025, 2035, these two levels only. Avoid this level. Okay. And in case market doesn't come for retracement, because many times we see that market is so volatile, so bullish, market doesn't come for retracement. In that case, you can look for a buy at breakout, or you can also look for a buy above 2052 as well. But be careful, because if you have been trading for a while, you must be knowing that false breakouts are a pain. Okay, so to avoid false breakout, enter with a small position at first. Once you'll see the okay market is really strong, in that case you can start going with the buy position. But initially, if you see that market is going above, market is going for a breakout, and you go with a small lot size. If you take, suppose you take a lot size of 0.5, then at first you go with a lot size of 0.1. If you see the up move is continuing, then you can enter again on the middle. Why? Because at present we can see that there is not much volume in the market. Okay. And in absence of volume, there's a high chance of false breakout. That's why I'm saying that especially during the Asian session, European session, if you see market is going for a breakout, you need to be careful. And if you're wondering about the resistance, the strongest sellers are present around 2063 to 2067. This is a level where we have the strongest sellers are present, or we have a strong resistance around this area because of strong price rejection previously. So we can expect that during the day and during the US session also, if market shows an upside, the sellers around this area will create some trouble. They will not allow the market to go up that easily. And if market reverses, as a day trader, you can look for a sell position. Usually I prefer to stay with the trend of the market, but on certain areas or levels of the market where we have strong buyers and sellers present, as a day trader we can obviously take some risk. But yes, it should be calculated risk, so follow proper risk management. Do not gamble. We are traders, not gamblers. Never ever forget it. Anyways, that's all from my side, my dear friends. Thank you so much, and thank you so much for such an overwhelming response for the 3 days workshop, which is starting from today. The English workshop is starting from today, and it was really I'm overwhelmed to see such a response, love from people from all around the world. Okay, thank you so much for making my life so special. Thank you. And that's all from my side, my dear friends. And weekly closing is going to be important in case market gets crazy during the US session. Okay, try to stay away from the market. Enjoy the evening with your friends and family.